Hey everybody, Real Estate Ninja here. I hope you're doing great. I know it looks like I just left one set, came back. Oh no, I'm in the same set. I'm actually filming for the Real Estate Crash Course right now, but I have a story I want to share with you, and that is Wells Fargo is stepping back from mortgages after the Fed's rate hikes helped crater the U.S. housing market. It says right here, if I can find it now, Wells Fargo is downsizing its mortgage business after the Federal Reserve's outsized interest rate hikes hammered the housing market by helping dampen demand. The bank said Tuesday it will now offer home loans only to existing Wells Fargo customers and family from minority communities. Can you believe that? So they're only going to be assisting Wells Fargo customers and families from minority communities. I want people to understand that this exact same movement happened at the top of the last real estate bubble. And when I mean top, it's before it actually burst, when the media told you it burst. It was actually bursting back in 2006, and we saw programs like this come out back then. They were trying to start goodwill and things like that. I want to warn you, and this is what I've been putting in my real estate course, things to identify when it comes to lenders, the difference between a lender at a bank as opposed to a mortgage broker, someone that works for multiple companies, right? Also understand when you are being sold a bill of goods that isn't that great. And as a matter of fact, right now, and this is off subject, but it's on subject, homeowners, home buyer assistance programs, like programs that the government gives you to help you with your down payment, I want you to remember this. If you need help with your down payment, more than likely, you may be employed right now and you just squeak right in with a loan, but the big bankers know that the likeliness of you being able to keep paying those mortgages as the economy gets tighter is going to be slim to none. And then the bank's going to come back and take your house and then going to be able to flip it and sell it. I want people to understand how very important this is. People need to understand this cycle repeats over and over again. And so many people had buyer assistance programs back in 2005, 2006, because the narrative, the official narrative, was that we didn't have enough houses. But no, it wasn't it. It's just that we had an excess of people that wanted to buy. All of a sudden, because they saw the booming prices of homes and they wanted to get in and make money too. And they were the ones that were late to the game. So at the end of a cycle, a real estate cycle, you start to see ninja loans, for lack of better terms, for loans that do things and get people in that should not be buying a house because they simply can't afford it. The numbers do not work, right? And this is always happening prior to an economic downturn, and then they're really in trouble because they lose their job or they're simply cut back in hours, all right? So it's very, very important that people understand that. So as of right now, Wells Fargo customers and families from minority communities are the only ones, as of right now from this story, and I'm gonna link it below too so you can read it and verify it, that literally this is not coming out of my mouth, I'm just repeating what they say, are going to be the people they're going to be giving mortgages to, all right? And then here's a quote. "We are making the decision to continue to reduce risk in the mortgage business by reducing its size and narrowing its focus," Wells Fargo CEO of consumer lending Kibler Santos said in a company statement. The bank also said that it would shutter its correspondent business, which sells mortgages through third parties, and scale back its servicing portfolio. Now, guys, I don't even know if you remember this, but Wells Fargo was caught making a bunch of fake accounts too. The interesting thing is that banks primarily make their money by giving out loans. If they're not giving out loans, then they're doing what's called factoring. It's a whole nother topic, banking topic, but really when you think about it, do you think that Wells Fargo could stay in business by limiting the amount of mortgages that they make? Or is this just a way to spin the truth that they are not able to make a lot of mortgages and they're just trying to do goodwill and then suck you in as a banking customer because you're afraid that if you don't get a Wells Fargo mortgage, you're just going to be out of the game? There's a lot of banks out there. So it's interesting. Are they trying to just get more people to start bank accounts with them? That's going to be interesting. Only time will tell, guys. So with that being said, I thank you so much for watching. If you guys want to jump in on the real estate crash course before it is finished being filmed, there's an 80% code below. All right, guys, with that being said, the Real Estate Ninja is out.